Two people, same $100,000 income. Person A, W-2 employee. Person B, business owner. Person A takes home $67,000. Person B takes home $83,000. Same income, $16,000 difference. Not because B cheated, because B understands the structure. Here is how the tax system actually works. As a W-2 employee, you earn money. The government takes its cut first, then you get what's left. As a business owner, you earn money, you spend on your business, then you pay tax on what's left. Earn, spend, then tax. That is the entire difference. $100,000 salary, W-2, single filer, 2026, federal income tax, $16,290. FICA, Social Security and Medicare, $7,650. Average state income tax, $5,000. Total taken, $28,940. You keep $71,060 before rent, before food, before anything. Now the business owner, $100,000 revenue. They deduct $20,000 in business expenses, home office, equipment, software, travel, taxable income, $80,000, plus the 20% QBI deduction made permanent in 2025. Taxable income drops to $64,000. Total tax, roughly $17,000. They keep $83,000. Same $100,000. $12,000 more in their pocket every single year. They told you taxes are fair. Everyone pays their share. That is not a lie, but it is incomplete. The tax code has over 70,000 pages. Most of those pages are not for employees. They are for business owners. Deductions, credits, structures. The tax code was not written to be simple. It was written to reward specific behaviors, creating businesses, creating jobs, creating assets. If you are not doing those things, you pay the full rate. That is not unfair. That is the design. Here is what the structure actually looks like. W-2 employee, earn, tax, spend. Business owner, earn, spend, tax. 3 words, completely different outcome. As a business owner in 2026, you can deduct your home office, your phone, your equipment, your software subscriptions, your education and training, business travel, health insurance premiums, retirement contributions, all before tax. These are not loopholes. These are the rules written into the tax code, available to everyone, but only used by those who understand structure. You do not need to quit your job. You do not need an accountant yet. You need one thing, a legitimate business. The content system we have been building, video, PDF, email, money, that is a business. The moment you have a business, you have access to the tax structure. Your phone used for content, deductible. Your laptop, deductible. Your internet connection, deductible. Your education, deductible. The course you bought to learn this, deductible. You are already spending on these things. The difference is, are you spending as a consumer or as a business owner? One way, you pay full tax, then spend. The other way, you spend, then pay tax. That one shift is worth thousands of dollars a year. Stop thinking about cutting your taxes. Start thinking about changing your structure. Tax is not the enemy. The wrong structure is the enemy. W-2 is the most expensive tax structure you can be in. Not because the rates are highest, because you have the fewest tools. Build the business, access the tools, keep more of what you earn. This week, calculate your effective tax rate. Take your total tax paid last year, divide by your gross income. That is your effective rate. Now calculate what it would be if $20,000 of your expenses were deductible. That gap is money you are leaving on the table every year. The tax structure gap PDF is in the pinned comment. W-2 versus business owner tax comparison. Legal deductions you can access right now. First steps to changing your structure. All of it. Free, right now. Get the PDF, start this week. Most people will watch this and go back to their W-2, earning, taxing, spending every year, paying the maximum rate with the fewest tools. If you don't change your structure, nothing changes. Not in a year, not in 5 years, not in 10 years. Nothing changes. Next episode, why your lifestyle is the real trap. and most people will stay exactly where they are. Nothing changes unless you do.